we have decided to review 5 indices: the Nifty, the Bank Nifty, the CNX MIDCAP. We always do. Apart from that, we have chosen 2 indices, sectoral indices. One is CNX PSE index, that is the public sector enterprises, government companies. Apart from that, we have also chosen the CNX REALTY index, which has more than tripled in fact in the last 10 months. This week the Nifty has shown a special formation. That's a bearish reversal pattern. It's an island reversal pattern. Look at the red circle within which there are 4 candles, 2 green candles and 2 red candles. The lower green candle and the upper green candle, between them there is a gap, and again the first red candle and the second red candle, there is a gap down. This is island reversal formation, and this island reversal formation got confirmed preceding short-term low of 21,448 got violated on the downside 18th of January when Nifty formed a low of 21,285. After that there had been a minor bounce again with a gap. The week ended on Saturday, the special day, posted a low of 21,541 and finally closed at 21,571, which is just about 30 points higher than the low of the day. And this is the first time we have seen the worst weekly close in last 3 months. Does this indicate that we are actually headed for a correction? In all likelihood, there could be a correction. But for that correction to be confirmed, we need to see after the island reversal, the index posted a low of 21,285 on 18th of January, Thursday. Once that is broken and the current 50-day moving average, which is at 21,058. So these 2 supports need to be broken. First 21,285 and then 21,058. These 2 support levels, once broken, it would signal that the correction has set in. We have noted that the 50-day exponential moving average, which is at 21,058, that needs to be kept in mind. And after the 21,000, once that gets broken, you have another level to watch out for, that is 2976. At least the market has weakened considerably, that we need to keep in mind. And the island reversal at the top generally is a very reliable pattern, and it might lead to a corrective swing in the market. HDFC Bank collapsed after the results were out. After that, the Bank Nifty became very weak, and it has now been showing a bearish pattern of inverted saucer. Suggests a deeper correction. Look at the ellipse. You can call it a dome-like formation. You can call it an inverted saucer. You can call it a rounded top. Whatever nomenclature you want to use, but the thing is that 20-day moving average, 9-day moving average and 50-day moving average all have turned down. And there is every possibility that the 200-day exponential moving average, which is at 44,555, that might be tested. This is a truncated week that we are heading to. Only Tuesday through Thursday there will be trading. Monday is a holiday, and next Friday for the Republic Day, that would also be a trading holiday. So whether this will happen in the coming week or it happens going forward, we need to see. But one thing is very certain, that Bank Nifty looks very weak, and if the 200-day exponential moving average at 44,555 gets taken out, then there is every possibility that we might see the minor low of 43,320 also getting tested. And after that, there is a major intermediate low that happened on 26th of October at 42,105. That might also be tested by the Bank Nifty if further weakness were to happen. 47,500 through 48,000 would be the major supply zone for the Bank Nifty. Only if the Bank Nifty stays above 48,000 mark, then you can expect a good recovery in Bank Nifty, for which the probability is very, very minimal. There is nothing in the banking stocks that can actually pull up the index so much, because the highest weighted stock, that is HDFC Bank, its prices have collapsed. And if it were to fall below 1460, the intermediate low prior to the upswing that took it to nearly to 1700 plus levels, if that low is also taken out, then you can see that there will be hardly any possibility of 48,000 being taken out by the Bank Nifty. In that case, weakness continues to be there, and it could become very weak if the 200-day exponential moving average gets taken out at 44,555 level. Once that happens, there will be further selling, and if the major intermediate low that was posted in 27th of October at 42,105, if that gets taken out, there will be mayhem in bank stocks. At least in the private banking space, there will be a lot of selling. CNX MIDCAP is the story of have money will buy SIP-led upswing. It is a relentless rise. It doesn't stop. It just goes on and on. So long as the SIP money comes in, it continues to come in, the CNX MIDCAP index will continue to move up. Currently, it has closed at above 48,000 mark, 48,062.80, but it is going up and up. There had been some kind of a swing throughout the year 2023, except for few weeks, 6 or 7 weeks, it did not. Otherwise, it has continued to move up since it started late March. Is it showing any kind of major weakness? Even the oscillator, that is the 14 RSI oscillator on the weekly chart, is not suggesting that there is any kind of problem there. If you look at the chart, you will find that even when there had been profit taking, the 9-week moving average ably supported the index, and when there was some kind of a corrective swing, the 20-week moving average gave support to it. That was around August. After that, the CNX MIDCAP continues merrily as ever. It is just going up and up. What I would suggest is that this is a very good upswing, and there is still not any major sign of correction, but be vigilant and also be a little wary of putting your money at such high prices. Rather, if you have invested in mid cap or small cap stocks, watch them very closely. In case of any sign of trouble, you can book part profits. In some cases, you can book full profits, that kind of a thing. I'm not saying that we are going into a major correction or the bull market is getting over. No, nothing of the kind, because that cannot happen, not because of any political development or the current dispensation continuing for the third term. No, it is the world's central banks. So long as their balance sheets are still filled with bonds, that means the money supply in the world monetary system, if that continues like the way it is now, then there can only be corrections, but there cannot be a major downswing or a major fall or something. Even if there were to be a fall, we have seen that the market recovers because there is too much money and that asset price inflation might continue. Yet I would say that since these mid-cap stocks are generally vulnerable for a sharp fall that has happened in the past whenever the things have turned bad, so be very watchful, buy very carefully. That should be your motto. Yet the suggestion is that taking some money off the table after a protracted rise at a brisk pace for such a long period of time, more than 9 or 10 months, it would be worth your while to take some profits. Quite an interesting index to study this week would be the CNX PSE, that is CNX Public Sector Enterprise Index. This basically tracks the public sector enterprises in our stock market from the low of 5768.90, 5768.90 on 26th of October. That was the low. From there it reached a high of 8478.10. That happened last Saturday, that is 20th of Jan. A 49% increase in less than 3 months. Indian Railway Finance Corporation, be it IRCTC, be it the other public sector enterprises, REC, PFC, all of these, they are going up like crazy. They have gone up 50%. The index has gone up in less than 3 months' time. Is there any reversal signal? Only in the RSI oscillator is showing some divergence. But as you can see on the chart that the 9-day moving average is ably supporting the upswing. And it has never been broken decisively. So we can say that it can still continue further up. But an index that goes up by 50% in less than 3 months' time, if you are holding PSU stocks, at least taking part profits off the table, isn't that warranted? Definitely it does. So it would be worth your while to at least book part profits so that you don't get a nasty surprise. This kind of a run cannot continue forever. Less than 3 months, 50% rise in an index means one hell of a lot. So don't get greedy. At least book part profits here. This is the most important message in today's video, that you need to book some profits in public sector stocks. If you don't, then later you might actually regret not doing so. There is another index that has posted a very strong move also. This time in 10 months time, the CNX Realty Index has moved up by 2.414 times. From a low of 370.65 on 27th March, it has posted 894.40 on Jan 20, that is last Saturday. This is actually a 2.414 times move from the lows of 370.65 to the high of 894.40. It's a huge run. If you look at the realty stocks, you will find that they have also gone up very sharply over the last 10 months, and that is being reflected in the CNX Realty Index. You name it, you have it. DLF, Godrej Properties, other realty stocks, they are moving up like crazy. Again, my suggestion is this kind of a huge run, at least some profits should be taken. Some money should be off the table, because if there were to be an intermediate term correction, then these stocks will give you the opportunity to re-enter at lower levels. This kind of huge upswing, they always result in some kind of a significant corrective swing. So that's the reason why it would be better for you to actually take some profits. And also look at one thing. This time the new high was made, but with a red candle. I would say that definitely there would be further upswing in realty that can happen, but a mid-course correction is overdue in this. This is the second overrated index among many indices, but these two are the prominent ones. If the index falls about 20% in a correction, a lot of stocks, we will see that they would be falling by more than 25 to even 35%. So from 1/4 to about 1/3 of their value might get diminished from the current top. So that's the reason you need to be very vigilant about it, and at the first sign of trouble, you should take some money off the table. I'm not saying that the CNX Realty is suggesting that its bull market is over. No, not at all. In fact, Realty bull market may continue even after the PSU bull market gets a major roadblock. Thank you.